Good evening. Hello, everybody. It's another beautiful day. I'm grateful to be alive. It's another wonderful time with Israel Keys Wealth Group. Hope you guys have been having a good day so far. And those of you that traded, hopefully you had a good win. We learned one or two things in the market today. That the market does what it wants to do. And we just follow the big boys, really. That's all we do. So tonight we're just going to be continuing, our session from last week, Tuesday, talking about key levels. Okay, talking about key levels, and we focused the key levels that we're talking about. They're different from the round number institutional levels that Israel, took you guys through. And these key levels are also levels on your higher time frames that you could focus on to take advantage of certain price actions that happens around those areas. So, let me do this again to remind you guys. We said the things we'll be looking at will be high highs. Let me make that highs and lows, opens and closes. And when I say highs and lows, open and closes, I'm referring to your candles. So for you to have a good understanding of this, you need to um, you know understand candlesticks to a certain extent. Okay, so have an idea of candlesticks to a certain extent. We've gone through that in previous sessions, so you can go back to look at those if you can. Let me put that in red to pop out for you. Okay, so those are the levels that we're going to be focusing on, and I would like us to we'll focus on the highs and lows, opens and closes, okay, of those of candles. And when I'm talking about candles, I'll mainly be referring to our higher time frame candles. So we're talking about anything from the daily, weekly, monthly, okay. Those levels are vital, okay. And what we just do is we identify their highs, their lows, their opens, their closes, and we just, drop our line on it and we wait for price to do its thing around those areas. They're very high probability areas for price to do what it wants to do. Okay, they're very high probability areas for price to do what he wants to do. So you can search for price action around those areas. Um, so from last week we already started. I was talking about how price turns on highs or on lows of prices. Okay, and the reason for that instantly will be, if we have marked out this lows, for example, that's a low, okay, and you can see price went to that low, and you can see it started to create some sort of reversal or turn in the market. From yesterday's analysis, we anticipated this anyway, and for price to start rallying up, okay. So price came to this level, and you can see price started to turn away. Now, there is a reason why price started turning away, because price has been going up for a while. If you look here, we've been having a nice bullish trend, and as they're moving up, everybody's been moving their stops, up, like that continuously. So price moves up, they move their stop. So they move their stop up there, they move their stop behind this daily low, and you can see those ones got taken out. Okay, and then as price continue moving up again, they put their stops there, they put their stops there, they put their stops, there, you get the idea. Now, price then reverses, and look, before price reverses, what does it do again? if you remember from the analysis session, we already identified that this spiked the high of a few weeks back and last week's high. Okay, so so that one was another good reason to go down, because he had some stops at the top that I took out, and some breakout traders that I triggered the trades in. But then, as you see price dropping down, okay, where did it reverse? It reversed at this low, this particular low there. So let's delete every other one there so we don't confuse you. So it took out 1, 2. So 3 days worth of low, 1, 2, 3. It took out those lows and started to reverse. Okay, that low is a key level. It is a key level. Every low, every daily, weekly, monthly, highs or lows, they are key levels, because at those levels, you're likely to see, significant price action, a price action that would, that would allow you to get into the trend or get into the market, when you start to look for certain price actions, okay, around those levels. So we'll take the lowest point there, and we just, so now at that low, if you decided to now drop to a lower time frame, let's go to H1 first to see if we have anything on H1. And if you can see on H1, at that very key level, look what happened. We have a H1 engulfing. It engulfed the previous candle. Okay. So that's a very, very good sign. Okay. And then you can decide to look for another entry on the 15-minute. Israel's signature entry loves going to the 15 minutes for entry. So you probably would have gotten in on this manipulation bar here, this blue one over there. So there's a manipulation bar there that you can get in on. Okay. That's some sort of price action around that level. Tonight, I'm not going to be talking about the entry. I'm just telling you how to identify those key levels, which is very simple. But the main thing is now for you to follow through with looking for certain types of price action around those areas. And as you can, if you remember yesterday, we said price is likely to continue to take out an intermediate high to drive into these areas. Okay. But look at where they did the move from. They did the move from a key level. It is the low of what day? Is the low of 27th of July. Okay. They came into that level, took out stops. So people that have been moving their stops as the trend has been going, they took them out. So they took 1, 2, 3, 3 days, 1, 2, 3, 4 days worth of stops were taken out. Okay. And then they're resuming their move up. Okay. So, I mean, the quick thing I can tell you now, as I will focus on the highs and lows, is every higher time frame candles, highs and lows, are key levels. They are key levels because when price gets to that area, to those levels, let me just drop some lines on here for you. So let's start from here. So if you look at the high of this weekly, okay, the week 4th of May, the following week, price rallied to the high of 4th of May and then dropped. It dropped, okay? And when it dropped, look at where it paused. It went down and stopped bang on the week high of the 20th of April, okay? So you can imagine you have that marked out on your charts and you wait for price action to happen around that level. Okay, if you're able to get the trade there and ride it all the way up to where the weeks, so you got in the trade and you went to the week high. So you will have been in this week at the bottom here at that level, and you could target this week's key level, this high. Okay. Right, and as with the week continue, you could say that's another key level. But if you look back this way, there's another key level that's close to this price. Okay, we have that, we have this. So you can mark the two out. So the weekend and night and the 2nd of March. As this week closed, the 25th of May, the following week, what happened? As they opened, they dropped down into the week high of 2nd of March, which we've already marked out. They kissed it and price took off again. Okay? And as price took off, you see this reversal again, came back down at the 1st of June's high. So they took out that high and then dropped. But then there was a reversal. Okay? If you look left, I'm sure, apart from this week, this low, okay, so price came to the week ending 8 to the week 8th of June. Okay, the 15th of June week came to the low and then took off again. But if you look left again, you will see there's a correlation with another week's high. Okay, look at this week, the 3rd of February. Okay, the 3rd of February, the high. Look at that. Price came and touched it. But this is what we would have seen, which I would have loved, which will make this trade really beautiful. So we are seeing a stop hunt into a key level. Okay, that is beautiful. So it stop hunted the previous week, 8th of July, 15th of June open. Sorry, yeah, 8th of June, 15th of June week open, dropped down, came to the low, reversed at the high of the at this key level, 3rd of February, and then price started going up again. Okay, and as it's going up, if it's closing, so when you have the week closing above the previous weeks, as it is closing above the previous weeks, those levels are key. If it is not closing, for example, this week it closed at the top there, but it didn't close past this previous week. So we wouldn't say we found a key level on the weekly here, okay? But as the week progressed, this week also did not close above any of this level until we find this week closed there. And that we closed above. So you can see this week closed above this level here. Okay, these two, remember yesterday, double tops will get taken, okay? That week 13th of July closed above the week 15th of June and the week 22nd of June. Key levels there, you drop it there, and look what happened. The week opened, touched it nicely, and then took off. Okay? Took off. And as this week closed, we start to form, as that week closed above there, it's creating new key level. So we have that week's high there. And if you look left again, remember what I said, you look left to see if you have another week that can close above. We have this really nice one here, nice and solid level there. Okay, look there. Okay, that, and then as we can see, this week is open, and you can see when this week opened, it came down, took out the low of last week, 27th of June, of July, sorry, and then it's looking to continue its journey up. Okay, I'm not mentioning direction now, but I'm just marking our key levels and what happens around key levels. So hoping that you'll be able to identify those key levels. Don't complicate it, they're very simple. You're looking for this session, we'll just be peeling back more and more onions here. But for this session, we're going to be focusing on the highs and the lows for now. Okay. They would suffice for you. Actually, it's only when you become quite advanced then you can now add in the open close relationship, or the open high, or close low, or close open, or open open low relationship. So those kind of relationships, so like all these levels that are marked out in red, so we can find the high low relationship, You can find an open close relationship. You can find a high close relationship. You can find a high and open relationship. You can find a low open relationship or low close relationship. But do you need everything to be able to trade? No. The most significant ones are the highs and the lows. Okay. So, but it'll be good for you to have an understanding. So when you see price, on the same level, if you see an open and a high on the same level, or you see a low and a close on the same level, those kind of relationship, it's also a very good level to identify. But for now, your highs and lows will suffice. Okay. Right. Let's come further down here. Let's move this. So as this week, look at this, we close aggressively above engulfing this previous week, then it creates another key level is created. And remember, as it closes above, we look left again. Which other level do we have? We have this level over here, 16th of March. And as 6th of April closed above 16th of March becomes a good level. And look, the week open came into it and took off. Okay, it took off, but this week was a bit stubborn. So some people would have been whipsawed, the following week. That week before it took off came down to what? The low, to this low, to the week low. Okay, it came to the 13th of March low. 20th of April came to the 13th of March low and then continues journey north. Okay, and as it was closing above, we are creating new key levels. Okay. And look at this. This week did not really close aggressive, but it closed above. So the week 27th of April closed above the week 20th of April. And if you drop our high there, our line there, look what happened. They came nicely to the high and also took out the low of the 27th of April and then continued the journey up north. Okay. So are you with me so far? Believes me, this is not complicated at all. Okay, it is not complicated at all you just need to do is to get your eyes peeled, mark 1 2 3, I mean 4 levels max that is close to your current price. So when the day closes or the week closes, so exactly what you can see me do on the weekly candle is the same thing you do on the daily, you do on the monthly. Okay, it is not there's nothing different because price is fractal. Okay, so let's look at some levels for for selling. So we see price reversing at the top here, and as it reverse, we are confident to know that it would have taken some highs out or reacting to a weekly low. Okay, so it took out the previous week high. So 19th 30th of December took out the 23rd of December week high, ran into this bearish order block. Beautiful. I love a stop on into an order block is always a great always presents really, really good, strong trades. And then you can see price started dropping. And whilst this week closed, we could argue that, yeah, we've not formed a significant, a key level yet. Okay, right? And then we wait. We wait for this week, 6th of January to close, and we find that we have a key level, which is the low of the 30th of December. As the 6th of January week closed, okay? And what happened the following week? Price rallied up to the key level there. Some nice price action would have taken place there. Could be a daily stop hunt. Definitely see market structure break. Definitely see engulfing around those levels, and then price came down. Okay. And as price closes below the previous week, we'll be forming more key levels. So that'll be a key level there. And then this low over here will be key level. Okay, that if price gets to that level, we will be looking for some sort of reaction. And as you can see, price closed aggressively down again. So we have this key level. We look left, another look at that level. Look at this low here. Okay, and as price closed. So as this week is closed, you'll probably have 1, 2, 3 level marked, and then you'll be waiting for price to get there, or you wait for when price get there to look for your own price action, for a signature price action for an entry. And they would always do this around this key level. Okay, it will always happen around these key levels. And as you can see, as the week continues, so we have this week closed slightly below here, ever so slightly below week 27th of January, 3rd of February close below it. It's a week close, but it's a level anyway. And as you can see, price rallied up, came back down, closed below here. But look, without even me dropping, I don't want to drop the line yet so that you can see. When we got to 9th of April, what happened? Price rallied up into that key level. Okay, into that key level. Look, this is like to the peep, to the peep. But let's be realistic. We'll have dropped this line here as well. Okay. I also like it when I have those when levels are close to each other. It means, it's a stronger confluence, correlation and all that stuff. Okay, so now look at this. It came into it nicely and dropped. But look at this week. What happened at this week? So we have this week closed below the previous week, which is telling us, okay, price wants to continue going down. But we then had the following week came up, took out the previous high, but did not get to that level. And bear in mind also we have a weekly bearish order block there. Okay, beautiful setup again. The week open took out that week's high into the order block. A star trade always. When there's a stop hunt into an order block, it is an A star trade. Always, always. You can make that your signature. Okay, and look, as price smashed into that key level from January, it did that in March. Price went crazy. So all of this was probably the news, the coronavirus and everything. Guess what? It wasn't random. Some other people have like it was random, it's crazy, it's because of coronavirus. But look, it went to a key level and then it dropped. It dropped 1 to 2 weeks, dropped aggressively. By how many pips? Let's just, for fun's sake, let's just measure it. Let's call it 1,100 pips. Okay, right? And as that drop happened, where would it have gone to reverse? Let's go to a monthly time frame to see if we find a key level. Do we have a key level? Okay, first one we can see is this significant low here. And then we have, oh nice, there's some monthly order blocks here. Okay. See, guys, we can't make this thing up, okay? Look, that deep down went right down and smashed into this monthly order block over here. This order block was formed September 2002. Okay, look at the level there, almost to the peep. Look, so that crazy drop down knew where it was heading. It took out this significant low. Let me change that color to, let's make it blue. So that significant low, the blue line took it out into this order block. And boom, what happened? Price reversed. And hence where we are now. Okay. Are you with me, guys? So far, enjoying? Good. Okay, let's move on. So that's from the just telling you what happens at key levels and how you can mark it. Okay. So this, let me take out all these lines again. Let's clean this up. Okay. So let's check out another pair and let's identify key levels. So we wouldn't just say this is only happening on it only happens on AUD USD or only happens on one pair. It happens across the board. Okay. Let's go to Euro USD. Okay, we're on Euro USD. And we can do the same, so we are on a weekly. You can pick any. Actually, for fun, let's go on the daily for this one because we've rinsed we've rinsed the weekly on AUD USD. So exact same thing. Just because price is moving in this direction, I think I want to choose an area where price went short. So we can just have okay, let's use it here. Again, this is around the coronavirus time. So as you can see, there's a turnaround that point at the top there. Where's my marker? So price reversed yet. So this is the daily, okay? And as you can see, there's a bearish engulfing that closed aggressively below the low of the 9th of March. So 10th of March, we saw that aggressive close, okay? And then you, because you've listened to the teaching and you've done your homework and analysis, you came there and you dropped the line on the low of the 9th of March as your key level, and you just waited. And then on the 11th of March, you see price rally up into that key level again, and it gives you the price action we're looking for. Okay. And then from there, you would have entered the trade and you have been going south. And as the price continued to close below previous days, so you look left, so close below that day, so we have that level there, and we have this level over here. So you can see price close, and then the following day, what happened? Price open, went into that level. Again, stop hunted the previous day into that level. Also a beautiful setup. I'm sure we would have seen some other block within that range, okay? And then look, price closes down aggressively again. So price got in there, reversed at that high. It reversed at the daily high. Look, it's like I can just make a rule to say they will never do anything if they don't go to a previous day high, week high or low, previous month high or low. It's like they will never do anything. They like those levels, okay? Before the reverse, they like going to previous lows or previous highs. It's just their signature. If they're continuing in the same direction as well, they like to use those levels as springboard to continue in the direction. So for example, if you realize that price is already going this way, going south, okay, we're going south this way. You can just help yourself by dropping a key level, finding out, okay, price is closing below previous days, closing below previous days. So it's telling me that, you know, they're very bearish in mind. Okay, so let me just mark up my key levels and see what happens. So this is one key level here. Look, double bottoms there. They were set up nicely. Okay, this day set these people up. Retail traders thought it's double bottom that they're going long. They pretended they were going long truly, but they only went long to get some more, you know, fuel into their engine to go south, and then took all of them out and continued. So look at that, they close aggressively below that level. Okay, below that level. And if you look left, you see there's another level here, this day low here. Like they came back, used it, and then what they've done with this level again is you can see that that high did not touch this order block. Okay, this bearish order block, they use it as a setup for future. Okay, the signature that we always talk about when they stop into an order block, and that's what they did here. Okay, they went past that high, took everybody out into the order block and dropped. Okay, so then they continue their trade down. So let's assume you missed the trade here, you missed the entry here, you missed this one. And then on the 18th of March, your friend had told you, man, Euro USD is going down. You need to jump on it. You're thinking, okay, what should I do? Because you've listened to one of our sessions and you've watched it, you just come here, drop your line on a key level, okay, one or two key levels. Look at how that level, okay, correlates with that level. Is like a double bottom, really. But it was taken out, and look, price came back to it the following day and give it final push down. Okay, so maybe you didn't get any of these trades, but you came in on this day and you got your trade nicely. And as price closed aggressively, and below we have the significant level marked out, and then the following day price came back into it and then dropped. So it dropped, you know, but it didn't close below. So this is starting to these are telltale signs that okay, price wants to reverse because it's not closing below. And then price came to the low of 19th of March. Remember, highs and lows. Okay, so this low is there. As price came there and you're observing live that okay, this is the low of a previous day. Am I starting to see some price action around this area? So on a lower time frame, you would have started to observe some, you know, and price action that would indicate to you a reversal in price. Okay, so I'm not discussing the kind of reversal you get now. I'm just showing you what happens at these key levels for now. Okay, and price continued, you know, price now rallied up, and as it rallied up, it's creating new key levels. Okay, so but I want to draw your attention to this. Look at this key level that was marked since 18th of April, March, okay? It was used a couple of times, but when it came back, when this drop down came back, they also used it as a springboard. But the ultimate one was this low, okay? This low, sorry, this low. So we have the 3rd of April, it's low, was taken out, okay? As well as we have a key level around that area. Now, this is where I'll bring in the second. Remember, open close relationship. I want you to pay attention to 24th of March and the 25th of March. Let me zoom in. So I wish it wasn't my MT4. I'll have seen exactly the price. But this, okay, look at this. This price, the price of 24th of March close is the exact same price of the 25th of March open. Okay. That's another good key level. And look at what they did when they got there. Okay, look at this price action. Okay. So key levels. So guys, just put in the back of your mind that price reacts at key levels, okay? And you can use those reactions to your advantage all the time. So what's that? What's that? What's that? Okay. Now as this move took off again and it closed above 1-2 days, we got key levels created. Okay, you can mark that out as well. This one too looks like a good open close relationship. No, it's not really. Not really. That open a bit higher than that. So we'll only take the high. Okay. And as you can see, they didn't use that high. They used this high, the 6th of April. Price came to it nicely. This just about 2-3 pips deep, and then they moved up. Okay. So it's all just being able to identify these key levels. Okay. Once you're able to identify, all you have to do next is just wait for price to do its thing around that area, and then you'll be able to take advantage of whatever happens there. Okay. So I just want to draw your attention to this key level here as well. Okay, which ties nicely to this bearish order block. So look at this engineered swing high, intermediate high. Price came down, went up, took that high out. So took this high, they took it out into this order block and key level, and then dropped. Okay. And that's how they got this nice move down. Right. Another thing I would like to point you, I mean, I'll just say if you just zoomed out, so if you went to your daily or your weekly charts, okay, go to your daily and your weekly charts, and then you mark out reversal point where price changed direction significantly, you start to observe something, uncanny. Okay, let me just clean the chart for you. So let's just do this together. Let's do this together. So let me get my box. So this is a reversal. Yeah, significant turnaround. Turnaround. There's a turn there. Move there. 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 Another one there. Here. Even this little one at the top here, let's add that to it. Okay. And where we are now. Okay. What I want to draw your attention to is before you get any move up, aggressive up or down, okay, 9 times out of 10 times, they will have gone. So if they want to go down, before they go down, they will go to the previous high. Okay. Now this one is not obvious here at the top, but I guarantee you, if you look left onto a weekly or monthly, that spike up took out the high. Okay, it took out, let's see, this level, significant level here. Right. So can you see that significant coronavirus high? It took out 1, 2, 3, 4 highs all the way from June, April 2019. Okay. And then boom, drop down. Let's go back to the daily. Okay. So now In fact, we can keep it on the weekly. It doesn't matter. But all I just want you to observe is before any significant move, if they want to go long, they'll go short first. So if they want to go, if they want to buy, for example, if they want to buy this rally up, look at this bearish candle. It took out the low of this bullish candle here, the 19th of April, it's low. 20th of February took out 19th of February low. It's ever so small before that move up, aggressive move up. Okay, and then this high took out that high from 2019 that we're talking about before the aggressive drop down. And then even they paused midway before they continued down again, they went to the high of 13th of March. So we have 16th of April took out the high of 13th of March. So that sounds like a Monday and Friday. So Monday took out the Friday's high, boom, dropped down again. Look at that, aggressive down. When it got all the way to the bottom here, before they went up, as in before they bought, what did they do? They went to the low of 19th of April, March. Okay. So the 20th of March went to the low of 19th of March, took it out before it went up. Okay. So this one here, we couldn't see this day taking out a previous high here, but it would have happened on the H4. Here you would have seen a H reversal, but let's just say, okay, it didn't happen for that. Okay. And that's the one time out of 10 times that it wouldn't happen. And then we continue. This week dropped down. You might say, oh no, it didn't take out the low. But if you look at this day, 6th of April, it came just slightly, ever slightly lower than 3rd of April, okay, before this rally up. And then when he was turning around again, look, 15th of April took out ever so slightly the high of 14th of April. Okay, you need to, those of you on MT4, you'll be able to spot this properly because we show you the time. But look, if I drop my line, where's my line to the high? Look, so you can see it took that high out and then dropped down. When it came here again, before it took off, it had to take the low. In fact, took more than one low. Took this low and also took this lows and this low over here. Okay, and then move up. When it got up here again, before it came down again, it took out this level's highest point. Okay, took out that high and then dropped. Yeah, I'm telling you, once you see this, you can't stop seeing it. So look at this. Before this move up again, it took out that low. They came up and meandered a bit here. There was a lot of transaction going on, and boom, finally taking off. But before they did the final kickoff, they had to take out a low. Look at this low. Okay, that spike below that low, 12th of May, 14th of May, took the low out, and up it went. Even here as well, the same thing. So we could go on and on about this. So guys, do you see what I'm trying to get your eyes to spot? Do you understand what is happening around these key levels? Yeah, I want to see your comments. Let me see your comments. Are you with me on this? Okay. I feel I've given you guys more ammunition against the market now, and I'll be waiting for your questions. Do you have any question? Let's tackle any questions in relation to this teaching in the next 7 minutes before we call it a night. Gerald, Monica, any questions, guys? Okay, it looks like you're all good. So let's just drop this key level here and let's see what happens around this level. Okay. All right. Well, when students, a teacher once told me that when students keep quiet, it means two things. It means they understand or they're confused. If you understand, it's good. If you're confused, you can always look back, watch this video again, so you get a better understanding. And I'm open to take your questions. Okay. So with that said, guys, I've had a great time, and I hope you guys have too. I wish you all the best as we continue in the rest of this week. Yeah, still waiting for your questions if you have any. All right. Thanks, guys. All right. Thanks, guys.